Before we jump in, I do earn a referral fee when you use the services and companies I demonstrate in the video, but there is no additional cost to you. I chose them because they're the best in the industry and you're safe with them.
Have you ever wondered how to convert your LLC to an S Corp? Well, to understand that, we first need to know what an LLC and an S Corp are. An LLC, or limited liability company, is a business structure that combines the flexibility of a partnership with the liability protection found in corporations. On the other hand, an S corporation, also known as an S Corp, is a special type of corporation that draws its name from Subchapter S of the Internal Revenue Code. This unique structure allows the income, deductions, and other tax items to pass directly to the shareholders, avoiding double taxation. One of the main differences between these two is the way they're taxed. So why might you want to convert your LLC into an S Corp? Some of the potential benefits include tax advantages and more flexibility in how profits are distributed among owners. Now that you know what an LLC and an S Corp are, let's delve into how you can convert your LLC into an S Corp. Why would you want to convert your LLC into an S Corp? A question that perhaps has been lingering in your mind. Well, let's delve into the reasons that can make this conversion a strategic move for your business. Firstly, tax benefits. An LLC, or limited liability company, is subject to self-employment taxes. However, when you switch to an S corporation, only the salary received from the corporation is subjected to these taxes, while the remaining income is considered as distribution, which is not subject to self-employment taxes. This can potentially save you a significant amount in taxes. Secondly, personal asset protection. Both LLCs and S Corp offer protection of personal assets, but an S Corp may provide an extra layer of protection against claims and lawsuits. It's because in an S Corp, shareholders are not personally responsible for corporate debts and liabilities. So if the company faces a financial crisis, your personal assets like your home or personal savings are typically safe. Thirdly, credibility. Let's face it, the term corporation often carries more prestige than limited liability company. This could potentially increase your business's credibility with potential partners, customers, and investors. This isn't to say that an LLC can't be credible, but converting to an S Corp might just give you that extra edge in the competitive business world. Lastly, there's the advantage of attracting investors. With an S Corp, you can issue shares of stock, which can be an attractive point for potential investors. This can pave the way for more investment opportunities and potentially business growth. However, it's important to remember that every business is unique, and what works for one might not work for another. It's always advisable to consult with a legal or tax professional before making any major changes to your business structure. If these benefits align with your business goals, converting your LLC to an S Corp could be the right move for you. Remember, it's all about finding the right fit for your business. So, how do you convert your LLC into an S Corp? The process may seem daunting, but when we break it down, it becomes a manageable task that can be completed with some time, patience, and attention to detail. Let's delve right in. First and foremost, it's essential to review your LLC's operating agreement. This document outlines how your business is run, and it may contain specific provisions about changes in the company's structure. If your operating agreement does not allow for a change to an S Corp, you may need to amend it. An amendment usually requires the approval of a majority of the LLC's members, so this step could take some time, depending on your organization's size and structure. Once the operating agreement is in order, you can proceed to the next step, which is filing Form 2553 with the Internal Revenue Service, also known as the IRS. Form 2553 is the election by a small business corporation form. By filing it, you're officially requesting that the IRS treat your LLC as an S Corp for tax purposes. But before you start filling out Form 2553, ensure you meet the IRS's eligibility requirements for an S Corp. These include having no more than 100 shareholders, having only one class of stock, and ensuring all shareholders are individuals, estates, or certain types of trusts, and tax-exempt organizations. Also, all shareholders must be U.S. citizens or residents. If you meet these requirements, you can proceed with completing Form 2553. On Form 2553, you'll need to provide information about your business, such as its name, address, and employer identification number. You'll also need to indicate when you want your S Corp election to be effective. This can be any time in the current tax year before the date you file Form 2553, or it can be any time in the next tax year. After you've filled out the form, it needs to be signed by all the LLC members. This is an important step because by signing, the members are agreeing to the conversion and the conditions of being an S Corp. Once the form is complete and signed, it's time to send it to the IRS. The address to which you'll send it depends on the state where your business is located. You can find this information on the IRS website. The IRS will then review your form. If everything is in order, they will send you a letter confirming your S Corp status. This could take up to 60 days, so patience is key here. Now, you're almost there. The last step is to update your LLC's operating agreement to reflect the new S Corp status. This involves detailing how the S Corp will be managed, how profits and losses will be allocated, and how taxes will be handled. Once again, this update usually requires approval from the LLC's members. So there you have it. Converting an LLC to an S Corp involves checking your operating agreement, filing Form 2553 with the IRS, and updating your operating agreement to reflect your new status. It might seem like a lot, but with careful attention to detail and a bit of patience, it's a task you can certainly handle. Remember, it's essential to ensure all paperwork is correctly filled out and filed to avoid any potential issues down the line. And don't forget, if you feel overwhelmed, there are professionals out there who specialize in this process and can provide valuable guidance. What challenges might you face when converting your LLC to an S Corp? Well, there are a few hurdles that might come your way. One of the biggest challenges lies in the realm of taxation. While an S Corp can offer tax advantages, it also means that you'll be subject to more complex tax laws and regulations. This might require additional financial expertise and resources that you hadn't anticipated. Another potential challenge is the need for more formal business operations. S Corps require a structured management with directors and officers, regular shareholder meetings, and adherence to corporate formalities. This can mean more time and resources spent on administrative tasks and less on growing your business. And let's not forget about the potential cost of conversion. Depending on your state, there may be fees associated with the conversion process that can be a financial burden. Despite these challenges, many business owners find the benefits of converting their LLC to an S Corp outweigh the potential drawbacks. Let's quickly recap what we've learned today. We've explored the exciting world of business structures, focusing on the transition from an LLC to an S Corp. We've discovered that this change can offer substantial benefits, such as tax savings and improved income strategies. However, it's not a decision to be taken lightly. The conversion process is thorough, requiring careful planning, paperwork, and adherence to tax laws. From notifying the IRS to amending operating agreements, the steps involved are detailed and must be followed meticulously to ensure a smooth transition. We've also touched on potential challenges, such as the stricter regulations S Corp must adhere to and the potential for increased administrative burden. Remember, every business is unique, and what works for one might not work for another. Always consult with a business or tax advisor before making any significant changes to your business structure.